folks, this is Michael Huddleston with the Inner Circle Trader blog entry for February 1st, 2011. Okay, looking at Baby Pip's thread that I've been hosting, what every new and or expiring Forex trader still wants to know. I'm not going to pronounce this right, so I'm just going to highlight this. This question was, when cable broke through 160 figure, noticed it didn't actually touch or go through the level when it retested. I know you said institutional players tend to do their deals at these big numbers, so does that observation have any meaning? I'm totally clueless if it means anything at all, but thought you might have some insight. So let's go and take a look at that. Alright, we are looking at the cable, and let's go to a 1 hour chart. Well, first let's note this area here. Okay, I have the 160 figure denoted on the chart here, and as the question presented, we did not trade down to 160. We were in close proximity to it, but we didn't get quite far enough down to touch the 160 figure. Okay, and first and foremost, number one, whenever we go back through a figure, generally, yes, you would like to see a retest actually trade to it, and maybe even trade as far as 20 pips below it to the institutional level, which would be, in this case, 159.80 in this area. That's one of the caveats that come along with trading the figure. You can make a living actually just trading the full figures, and I know I get a lot of questions about looking for one specific type of trading method or concept, and that's why, for me, I think it's one of the easiest ones to trade, and I think you'll find it is pretty routine. It comes a lot. You might get several of them in a week, many of them in a month, and throughout the year, it's a pretty good number of trades. But that's for another instructional segment. But for right now, we're just going to highlight the inquiry that was posted on Baby Pips. So getting to 160. Whenever we go through a figure, and 160 as of late has been a very important level of resistance. Once we blow through it, okay, and today I believe we had shown some continuation through it, but initially yesterday when we popped up through 160, when it was retracing back in here, the players that really have the control of the market makers and institutional traders, they have a vested interest in keeping price above full figures. Okay, in other words, they don't want to see the cable trade back below 160, because if it's back below 160, what have we seen recently? Over the last few weeks, we've seen that 160 has presented several opportunities to go short. So if it drops back below 160, what's going to happen? Everybody's going to dogpile on it again, and you may see a capitulation and really see it drop down hard, and in a condition I like to call riding the lightning, where it just continues to fall off, and they don't want that to happen. So what do? They don't even allow the figure to be retested at all. But if you go back to your support and resistance video that I posted on this thread, it highlights that not only do we use the full figures, but any round number is a psychological number, and where most people place their orders to enter on a stop or trailing stop losses. So let's look at how that might be used in conjunction with why it did bounce here, not at the full figure. So let's go to a 1 hour chart. Okay, this is the 160 level here. Okay, and I'm going to take these vertical lines out in a second because they may be causing the chart to be a little too busy, but notice how we've had all these attempts to get above 160. Okay, and then we had the one that we were very fortunate in catching sliding down. Well, when we traded back up to it and sliced through it, while 160 is the full figure that we should have been monitoring, one should also be aware of the support and resistance factor that comes along with trading. So let's take these period separators out. Okay, notice how these highs in here, okay, basically converge at around 160.15. And what does that tell you? Well, it tells you that we are within 15 pips of a confluence of support and resistance because the full figure is at 160. Okay, and 15 pips above that, and variance would be 160.15. So let's drill back down because we've already noted that. Well, let's look here. If you're looking at a 5-minute chart, guys, notice what you're only seeing. You're only seeing a small little snapshot of a larger picture. So while we can say, yeah, this is the support resistance level here, see we had resistance, and then we traded back down to it. Notice we didn't come right down to this level, but we bounced up. You're only going to see those types of fractal support and resistance levels, or dealing range highs and lows. You want to keep your perspective on your trades from at least a minimum of a 1-hour chart. So you want to make your trades based on a minimum of 1-hour chart, ideally a 4-hour and daily chart. Those time frames will give you your key reaction levels. For instance, these are key reaction level. So when price traded back above it, we traded down into the figure of 160 in here. Okay, so let's drop our line back down into the 160 even level. Okay, so no, we did not get down to that level in here, but using the 160.15 area, notice how we hugged in that and then finally broke out. A small pennant formation in here. Okay, so that's one of the reasons why market was unable to go back down to 160, because this was an area of key support. Okay, so now let's take this level out right now because it's not going to bode well for any analysis we're doing now. So we will insert our pivots. Okay, and what I'm going to highlight to you is, alright, here is today's action, and this is yesterday, where we were being asked why didn't we trade back down to the 160 figure. Okay, let's look at, let's make the chart so we can scroll. Okay, here it was the time frame in question. If you note the previous day to that, here is an R2 and R1 level. Okay, now I'm not going to pull the mid fibs up, I'm just going to plot them through a fib. Okay, and here is your 50% retracement level in here. Project that forward. Let me see if I can get that to show up a little bit cleaner. Scroll back in here. Okay. Now what we're going to do is we're going to take that, and it's probably hard for you guys to see, I apologize, but here's that 160.15 level we've already noted, and here's the 50% retracement. We'll just drag that right onto the 50, and let's take it back out to our level in there. Okay, so we have a midpoint pivot, MR2, from this day on the 28th. So yeah, like the video suggests, with support and resistance, previous days support and resistance levels still have an influence on the market today, and it will have an influence on the market tomorrow and it goes on and on and on. Let's take this fib out. Okay, so we have a mid pivot in here that price found support at. Yes, we were bouncing underneath R2, okay, but pivots are just one piece of the puzzle, and the market flow and dynamics were suggesting the market was going to trade higher. So you have to take that in consideration and reasonably expect that, even though that pivots are useful on some instances, when we have strong trending days, they can be exceeded pretty dramatically, and while they still can be useful in the future, again, it's just one piece of the puzzle that we have to use in our confluence of events that supports a trade entry or a setup. So yes, while we did not trade back down to the 160, there was other technical factors involved supporting the notion that it wasn't needed to be a valid trade setup to continue higher. So hopefully that is satisfying to your inquiry about why we didn't trade back down to 160 even. There was other support resistance levels that provided price support for it to not trade down to there. And the psychological reasons behind it was already explained earlier in the video. If we traded back below 160, every bear in the country would have jumped on this and tried to short it down to a new monthly low, simply because 160 has offered so many other opportunities in the past. But going back to our 1 hour chart and looking at that time frame, here it is here. We had a very clean level, and this was one of the levels I was referring to. In fact, the night we were in the chat room and we were trading live, the reason why I went initially long in here is because I felt that this level was suspect. It was too clean. In other words, there was too many times it just, very precise, and when it went up to 160, it just traded off again. But we had reasons to go short, went short in here, and then we recently just found ourselves up here again. So this was the action here I was anticipating in this time frame here, but it didn't happen. So we took a small loss and still made money. So that's the nature of this business. You got to be profitable even when you're wrong. So that will be today's installment for the cable. I have been flat. I did not take any trades. I've been very pleased with the move I caught here. Before I close out, let's look at this was the area that I closed long at, right in here, 160.30, right in here, and it went up just a little bit more, just shy of 160.50, and we had a price projection that we did in the previous video, suggesting that we would see 161.15. Okay, so let's highlight that real quick and let's see what happened, in real market action. So we did have some forecasting the future events that did transpire today. Noticed how we hit consolidation in here, traded down and right back up to that level. Okay, and then we found some support in this area here. So this is a level, guys, that was given to you in advance as a target for an upside objective if price was to continue higher, which it did. And while I was not in the move at all in here to take profits or capitalize on it, hopefully you've seen some of these concepts in real time and before the fact that these do in fact have some some validation, and they are very, very effective if used properly and patiently. You don't want to be trying to apply everything at one time and trying to just get a trade. But if you guys are into intraday trading and scalping, using these concepts can provide you a nice little opportunity to go long in here, and just bounce in here. But right now it looks a little toppy. Doesn't mean it can't whiplash and just shoot on up and create a higher high, but it does in fact look very toppy. We've had 2 days now where we've been trading above the central pivot, and that in itself sets up for a correction. And tomorrow we may look for it to try to seek its own daily pivot, central pivot point. So whatever that works out to be for tomorrow, I would expect the cable to try to reach for value, and value is always considered the central pivot point. Okay, so with that, guys, I wish you good luck and good trading.